We're just about ready to get started, everyone. So thank you all for joining us this afternoon to get settled in, and we'll kick off in a minute or so as we wait for a few more people to join us. Okay. Well, I hope everyone's had a wonderful day. Ladies and gentlemen, thank you all for joining us this evening, and welcome to Commercial Property Investment and for your SMSF. This evening, you'll be presented with an informative 45-minute webinar that will offer practical guidance on investing in commercial property using your SMSF and optimising your purchasing power. So this afternoon, or this evening rather, the presentation will cover the fundamentals of a self-managed super fund, or known as an SMSF. And as well as that, we'll be discussing tailored lending solutions for commercial property acquisition. Before I introduce our main speakers, I'd just like to let you know that we're going to have a Q&A at the end of today's discussion. You're welcome to, and I really encourage you to pop your questions into the chat during the presentation. We'd love to hear from you, know what your questions are. In fact, I know many of you will have joined us this evening with a question already in mind. So if you have a burning question, the reason for joining us this evening, please, why not drop it into the chat now? And you'll notice that there is a little chat bubble up the top of in your main web banner that allows you to open it up and to pop in a question. So please start using that now. And while you're dropping in your questions, I would like to introduce our speakers. This evening, we are joined by Wendy Jimenez and Abigail Monk. Firstly, I'd like to introduce Wendy to you. She's our first presenter, and she's an accountant with a distinguished and is a distinguished expert in self-managed superannuation funds. With 17 years of experience as an SMSF specialist, she has consistently delivered exceptional advice and insights for her clients. Her deep knowledge and unwavering dedication have earned her the trust and respect of her clients. As a proud member of the CPA Australia since 2010 and an active participant in the SMSF Association, Wendy stays at the forefront of industry changes and regulations, ensuring her clients receive the most current and relevant advice. Abigail Monk is a Liberty advisor and a specialty lender in self-managed super fund lending. She's passionate about finding custom lending solutions and options for clients with different income streams, credit history, and financial goals. She is a fully accredited and licensed finance broker with a diploma in finance and mortgage broking management. Abigail is equipped with the knowledge and skills to provide professional and ethical advice on SMSF lending products and services. Both of our SMSF professionals are here today to offer you their valuable insights and answer your questions. This evening's webinar is only a snippet, and we're here to help you get started in investing in commercial property using your SMSF. And both Wendy and Abigail are looking forward to hearing from you post today's discussion. So, without further ado, I'd like to hand over and welcome Wendy from Super Accounting.
Thank you very much. Before I start, can I please ask, for the people that are already there, how many of you already have a self-managed superannuation fund? That will help me to see how I can produce my presentation, to see into much detail I need to go, or yeah, so I just need to cover the majority of the people. So yeah, I just if you can.
I can see a couple of hands going up, Wendy. We've got Julie Hunter and Robert Hunter have got their fund. So put your hand up. You can raise your hand. You can see your hand up the top, or of course press on the Q&A, which should open up on the right-hand side of your screen.
Okay. Okay, yeah, it for me just to see into how much detail, but these presentations will go not for that long, and this is something very technical and very complex, but with the guidance of specialists, it doesn't get that complicated. But yeah, so we just got a few with already self-managed superannuation fund. So I'm just gonna start my presentation. And then before I start, just for people up there to take into account that the concessional contributions for last year, they were 27,500. And for this current year, you can now contribute up to 30,000. So you know that now you have extra that you can put on to your self-managed superannuation fund. And also for the people with super, the super guarantee. So last year it was 11%, and this year is 11.5%. So probably you are already aware of those changes, but just putting up there. Okay, so I'm gonna start with my presentation. Okay. We have named the presentation for the self-managed superannuation fund to be able to purchase commercial property, but just for you to know that self-managed superannuation fund can also buy residential property, or you can invest in so many ways, not just on commercial property. And this is important to let you know that we are doing this presentation for educational purposes. We don't know your individual circumstances, so you shouldn't take this as a financial advice. So this is just for education. Okay, so with a self-managed superannuation fund, I'm going to talk what it is, just probably to compare a bit with a normal retail fund. And I'm going to say why it's a good idea to invest in a commercial property, what would be the process to buy property, and probably some risk and things to take into consideration when investing through a self-managed superannuation fund. Okay. What is a self-managed superannuation fund? A self-managed superannuation fund, it's a structure that the government allows you to have if you want. It is a trust. It's just called self-managed superannuation fund. So with a self-managed superannuation fund, you can have up to 6 members. The other rule is that no member can be an employee of another unless you are related. So if it is husband and wife, they can work together, or brothers or sisters. So as long as you are related, you can be an employee of another. All members must be trustees of the super fund. If you are individuals, the best practice is to have corporate trustees, so you will have directors. So all the members should be directors of the corporate trustee. And another thing is that not even trustees or directors, you can get remuneration for the things you are doing for your self-managed superannuation fund. Okay. So what would be the difference between a self-managed superannuation fund and a retail fund? It would be that with your self-managed superannuation fund, you have more control, you have flexibility, you have the potential for better returns. So when I say control, it's because how it works, it's we do the setup, the new structure, and then you will have a bank account with on the name of that structure of that self-managed superannuation fund. And then the money that you have in your retail funds, it gets rolled over into your self-managed superannuation fund, into your bank account that you or your wife or the members of the super fund have control of it. No one else, just you, the members of the super fund. So flexibility is because it is in your name, you have access to your bank account, so you can access it and do the investments for the self-managed superannuation fund. So this is something that we have to be very careful because it's so flexible that things can go wrong. So I usually recommend that all the members of the super fund are aware of what it is, of what investments they are making. So I'm going to share a quick example of what can happen. So there were a couple, and they let the husband manage all the self-managed superannuation funds. The wife, she wasn't aware of the accounts. She didn't take care of the accounts. So the husband, he was having gambling problems. And because he had access to the money, so he spent the money. So the wife, she had to cope with fines and all the penalties because she was part of the super fund. And if you are part of it, you have to be on it. So you have to be in charge of all what is going on. So it's the responsibility of all members to manage and be in charge of the self-managed superannuation fund. So yeah, so it has lots of flexibility, but I just recommend if you go on it, like be in control and be always advised by professionals that specialize with self-managed superannuation fund. And potential for better returns because it's up to you. You can make better decisions at the point when you want to invest. And because you will have the cash flow, the money will be in your bank account. So you have the power to negotiate things better. Okay, so with self-managed superannuation funds, the Australian Taxation Office and ASIC are the institutions that overlook and regulate a self-managed superannuation fund. If you want to have a self-managed superannuation fund, it's really, really important that you have a good record with the Australian Taxation Office, like all lodgements up to date and pretty much never have had issues with the ATO. I have already mentioned, but I'll say it again because it is important. Everything that happens within the self-managed superannuation fund, the trustees, the members are the responsible ones. And every self-managed superannuation fund needs to have financial statements and tax return prepared each year, and it needs to be audited. So with the money of self-managed superannuation fund is because there are so much flexibility, but the ATO still wants to control what's going on in there. So it's protecting your retirement. Okay. With commercial property investment, you can have higher rental income. You can secure longer lease terms. There are tax advantages, like you can claim deductions on the expenses, and you can lower the tax rates. A self-managed superannuation fund just pays 15% tax. So a really good way to create wealth through your self-managed superannuation fund. Okay, so if you don't have all the money with managed superannuation fund, you can do borrowing. I'm not going to stand on this because I know Abby is going to talk about this. So just for you, the name of that borrowing is Limited Recourse Borrowing Arrangement, LRBA. So it's just the name, but it's borrowing through your self-managed superannuation fund. Okay, so the steps to purchase commercial property, I have started here in my slide with establishing the SMSF, but really you can get like a pre-approval from a broker without even establishing the self-managed superannuation fund. So they can assess how much money you will be able to potentially borrow through your self-managed superannuation fund. So you will have like clear expectations of how much money you will have, and to see if it's worth it for you to jump into a self-managed superannuation fund. So let's say you have that pre-approval, or you have had those discussions with your broker, and then I can help you, or you can start establishing the self-managed superannuation fund. When we establish the self-managed superannuation fund, we create that new bank account, we do the rollovers, and then she will be able to start finding the property and start looking for it. When you have found the property, so we start setting up a new structure. So it is a new trust. We call it Bear Trust, and that trust holds the property, and that trust needs a corporate trustee. So you will have a new structure called Bear Trust with a corporate trustee. So when I'm talking about corporate trustee, it's not compulsory. You can have individual trustees, but the best practice is to have corporate trustee, because it will save you for future problems. When you have individual trustees, if anything happens to any of the members, so it will come with complications of stamp duty and the name of the members on the assets. So yeah, the best practice, and to save lots of headaches, it will be to have corporate trustees all the way. Okay. So once we have the limited recourse borrowing arrangement, and they have done all the due diligence, all the legal documents, so we proceed to do the settlement, and you can start managing your property. So that's pretty much the process. The risk of investing in commercial property. So every type of investment comes with risk, and I believe the higher the risk, the higher the return. But the good thing is your retirement, is your money, and you will do the best, and you will try to make the best decisions. And hopefully, you are always guided with the right advisor to help you make those decisions. Something that I should say here before I go through this, and it just came to my mind because working 17 years with self-managed superannuation funds, I have seen how people get into arrangements where they do everything for the people. So they do the setup of the self-managed superannuation fund, they do the purchase of the property, they do the borrowing, and then because for people it's too easy, they are doing everything for me. So most of the time it's not a good investment for the people. So it's just because they are making it easy, it doesn't mean it's good. So if you are gonna enter in that type of arrangement, I really, really recommend that you get like a buyer's agent to help you to decide if that property or that investment is going to be the right investment for your self-managed superannuation fund. Just because they make it easy, it doesn't mean it's good for you. So just be aware when it's just a one shop where they do everything for you. So just be aware, okay? So, okay. So with property, there are market risk. So the value can go up, can go down. So there is always that risk. In regards to liquidity, so if anything happens and you need that money, with a commercial property, it's not that easy to sell it. So if it were shares or bonds or a term deposit, so probably easier to get the cash. But yeah, with property, it can take longer. So liquidity can be an issue there. And with self-managed superannuation funds, again, a lot of risk in regards to rules. But as I said, if you are with the right advisor, it shouldn't be a problem. Okay, so ways to mitigate those risk. First, diversification. Yes, you can start with property, but and then you can do different type of investments. So you don't put all the eggs in one basket. Another thing is you can do regular reviews. The Australian Taxation Office, they ask for a self-managed superannuation fund to have an investment strategy, and then that you review that investment strategy every year. And I have mentioned this a couple of times, professional advice. If you are going to use a lawyer, just look for a lawyer that is specialized in self-managed superannuation fund, a broker. Abigail, beautiful, she is a specialist in self-managed superannuation funds, an accountant like me. So always look for a specialist, okay? You think that it can be more expensive, but not really. Maybe because we know what we are doing, probably we are a bit cheaper. So who knows, but always look for the right advice. And that's me. Thank you very much.
Thanks so much, Wendy. That was excellent. I think that you took us through the structure of the SMSF, things to consider about purchasing a commercial property. And while Abigail is getting her presentation up on the screen, I'd like to remind everyone that we're doing a Q&A session at the end. So if you've got any questions about anything that Wendy has presented or you'd like some more detail on, please pop your question into the chat you can see up the top of the ribbon, there's a Q&A question bubble where you're welcome to type in your questions there. We'd love to hear from you. All right, Abigail, please take yourself off mute, and it's over to you.
Off mute is a good idea. Excellent. Let me just open that up again. Perfect. Well, welcome everyone. Thank you so much for joining Wendy and myself. This is one of many, hopefully. We are looking for your feedback in everything we're doing. We're just trying to educate as many people as possible. We're trying to just help people to get ahead and find different ways of making your dreams come true. So I'm just going to go through a couple of slides. Most of the slides are quite the same that Wendy has already gone through, but I'm just going to put my twist on it so it hopefully sticks. So why, you would ask yourself, and why would people need Liberty Super Credit? It's mainly for the people who don't have enough funds in their super to purchase property outright. And that's where Liberty comes and helps. So we can do both. We can do the residential super credit. We can also do the commercial super credits. There is a difference between the two. So with residential, you cannot have the related party is not allowed to be occupied the residence, but with the commercial side, you as a business owner, you can actually occupy the residence, and that's a really, really good thing for all the business owners out there, or somebody who has somebody in your family looking to possibly relocate, or so it's absolutely incredible opportunity. The years that we offer is maximum for 30-year long term. It's inclusive of the interest only up to 5 years. You can opt into that. We do not actually require the annual loan reviews that Wendy told us that really are important, but at the same time, this can save you a little bit of money on the side and help the accountant as well, not to do the paperwork every single year. And we really are trying to find the easy, simple solutions for each of our clients, because everyone has their own reason why they come to us. So Wendy already touched on this a little bit. So limited recourse borrowing arrangement. It is really an investment for the future. We do offer the pre-approvals. Pre-approvals mean pretty much you coming to us, getting your finance approved before you found the property. And like Wendy mentioned as well, it is important to have somebody there to really help you find the right property. So I can help you a little bit with the few steps of RP data. If you are looking for different areas, different suburbs, I can actually provide you some of those suburb reports, but to make a real decision, and it is always beneficial to talk to a real estate agent. So Wendy also mentioned that we can start the process with your existing self-managed super fund or non-existing self-managed super fund. If you've already had a chat with Wendy or your other accountant and you would like to start the process, we can actually do it with to be advised information. And once we're getting the information from the accountant, we can send it through to our assessment team. So that's how Liberty works, and we try to really simplify the process and make it as easy as possible for you. We also have the tailored packages for high net worth funds. We do consider credit impairment, but it is case by case. And as always, the guidance and support at every step is what we pride ourselves with. So with this slide, I just want to go through quickly a little bit about who is the borrower, who is the mortgagor, and because of the limited recourse borrowing, this is how it's set up. So the borrower is the self-managed super fund trust, and there will be usually a corporate trustee for the self-managed super fund trustee. The members are the beneficiaries and the guarantors. Bear trust is known with few names. They are also named as property trust, custodian trust. The bear trust itself holds the property. There will be a company as a bear trustee for the bear trust that will then hold the property for you until it can be released for you unencumbered to the self-managed super fund. So there will be two different companies for Liberty and how we set it up. There will be two different companies, one bare trustee and one self-managed super fund trustee. So that's really important. That's something I have seen in my time, that there's accountants out there who are not maybe specialists in self-managed super fund, and we've faced some hurdles in that department. But when you got Wendy, you don't have to worry about that anyway. And lastly, I got this little, it's not really that scary if you follow my cursive here. I'm going to show you a little bit of the cycle of the loan. So how the life cycle is, and put it in a context for you. So if you look here, we got the self-managed super fund as the borrower. Then we got the bare trust, which is the mortgager. Then down here, we got the property. And if you have a look here on the left, the members put their contributions to the self-managed super fund, and the tenants will also put their rent into self-managed super fund. And this is where the repayments will go to Liberty to pay off the loan. So just a quick example to bring it all together, and something that we really are happy to do, and just to help anyone out there who maybe have faced something like this or is currently facing some scenario similar to this. So the situation was that the local panel beater had just been advised that the place of business will be sold. So he wanted to buy it. Instead of buying it, they needed a solution. Liberty provided a commercial self-managed super fund loan at our highest LVR, which is 80%, 5 years interest only over a 30-year loan term, no requirements for annual reviews. So in this case, we can read this and we don't really understand necessarily how important this loan was for the clients. If you think of yourself as a business owner who has a physical location for almost 2 decades, you would want to stay there because your clients know you're there. You've established the relationships around your business. And this really is why I am doing, and why I'm doing it with Liberty, this part of the job, because this will help clients come out of the situation that they probably would have not been able to do in their personal space. So self-managed super fund definitely can come in handy in a lot of scenarios, and this was one of them. Yeah, so if you would like to talk further, if you have any questions, if you have any scenarios, if you know anyone who may need my help, there's my contact details, and I'm looking forward to hearing from you.
Thanks so much, Abigail. And that almost concludes our webinar and presentation to you all this afternoon, unless anyone's got any questions. To kickstart the Q&A session off, listening to you, Wendy, I've got a question for you, and I'd like to start by asking you, if I was a business owner and I was in my own renting a commercial premises, and I had a self-managed super fund, am I able to use my self-managed super fund to buy the commercial premises that I'm in?
Yes. So with our self-managed superannuation fund, you can buy any commercial property. And with a self-managed superannuation fund, you cannot buy from yourself except if it is a commercial property and if it is business real property. What that means is if it is land or building, but it has been used wholly and exclusively in one or more business. So if your company has premises and is being used in the business, your self-managed superannuation fund can buy those premises from you. So
Excellent.
that means that you can use that money within the business just by using the money from your self-managed superannuation fund. And also, if you don't have all the money within your self-managed superannuation fund, you can use borrowing within your self-managed superannuation fund. So you can do borrowing with your self-managed superannuation fund to buy the premises, but you can also do your borrowings within your company or at your individual level, because whatever you do with your self-managed superannuation fund, it's different, it's kept separated from you or your business. So you can do two things together at the same time. So doing one doesn't prevent you to do the other. So you can do multiple things at the same time.
That's thank you. So there's a little bit of flexibility there. And Abigail, can I just ask a quick question of you? What is the maximum that I can, if I wanted to borrow in my, so Wendy just said, okay, I could borrow through my self-managed super fund to buy my commercial premises. What's the maximum amount of money that I could borrow to buy the premises that I'm in? You're on mute, sorry.
I knew that's gonna happen. Oh my God. So it's 2.5 million is the maximum loan amount. Yes. And also we have maximum loan value ratio so that we lend maximum 80% of the value of the property. It does all come down to the postcodes and what type of property, but happy to chat offline with anyone and do your borrowing power. That's the start and kick it all off. Absolutely, reach out. I think we have some questions in the Q&A. Are you, Jane?
Okay. Thank you. Abigail, the first one is from Brian. Thanks so much, Brian. Straight up question. If you had a super balance of around 500K, what would be the maximum you could borrow for a commercial property?
Well, it's actually not that simple. Would you believe? We actually need to also know what your contributions are, what your yearly contributions are, what the rental income will be. We actually take all of that into consideration when we're calculating your borrowing power. So, and obviously, if you have 500K already there, you are sitting really, really well. You can do a lot with it, and I would highly recommend coming to me with an email, and I'll send you through a few questions that I would need to send you more accurate information. And it will be very quick and get you that correct data.
Thanks very much. We've got a second question here from Rathna Kumar. Thanks, Rathna Kumar. We've got, if we purchase a commercial property where the member runs a business, will that not be a related party when SMSF receive rent from the business owned by the member? Wendy, would you like to answer that one?
Love it. Yes. So that's one of the exceptions within the self-managed superannuation fund. If it is commercial property, you can buy it from yourself, and also you can rent it from yourself. So it's under the regulation, it's all allowed, and it's the perfect example when people get into a self-managed superannuation fund, that they purchase the property, they start using the money from the self-managed superannuation fund, and the business pays rent to their self-managed superannuation fund. So all the wealth stays within the group, within the family.
Thanks very much, Wendy. They're all the questions that I can see, unless I'm missing one somewhere. Okay. Well, if there are no other questions, I'd like to thank you all very much for your time and your attendance. Sorry, Wendy, did you have something?
Yes. So can I say another thing? It's when you purchase commercial property from your business and put it within your self-managed superannuation fund, you also have asset protection. So what that means is, in the unlikely event that something goes wrong with your business, the assets that you have put into your self-managed superannuation fund are protected from creditors. So as long as your self-managed superannuation fund is compliant and you have followed all the rules, everything within your self-managed superannuation fund is protected. So even if it is the premises where you run your business from, if it is under your self-managed superannuation fund, is protected. So yeah.
Jane, there is another question there from in the meeting chat from Kumuru. I think it's for
Okay,
Wendy.
in the meeting chat. Okay,
Just the chat.
sorry.
Yeah.
I'd like to check on behalf of my friend who is an immigrant. How is this going to work for people who are investing with a visa?
Okay. Yeah, no, to open a self-managed superannuation fund, you must be a resident of Australia and you gotta live here, and yeah, so no, it's just for Australians.
Thanks so much, Wendy.
But we can probably help with just investment in the personal name. If you want to reach out to me, Kumuru, or give my details to your friend, because there is lenders out there who I'm accredited with who can help with different types of visas to get them the investment property under their personal name.
Yes,
That is a good alternative. Yeah.
and if I can share why, it's because like for example, there was another couple and they opened up a self-managed superannuation fund. They transferred the money to the bank account, and as soon as they had access to that money, they withdraw all the money and they left the country. So that was an early release, which will be penalized, but they had already left the country. And in another way, if someone that wants to leave the country and remove their superannuation before they meet a condition of release, they should be paying about 47% tax. So yeah, so the ATO now looks very closely to the people that wants to open a self-managed superannuation fund to judge the real reasons why they want to open one.
Thank you for that detailed answer, Wendy. That was fantastic. I'd like to encourage you all post today's webinar to reach out to Abigail and or Wendy and have a chat about your self-managed super fund, potentially setting one up, and using lending to borrow within your self-managed super fund in order to create wealth and own commercial or residential property. Thank you all very much for your attendance today. We appreciate your time and attendance. Have a wonderful evening, everyone. Thank you very much.
Everyone. Till next
Bye-bye.
time. Send us your criticism and your positives and negatives. Thank you, girls, and thanks, everyone.
Thank you.